The Economic Wire, Market and Economy Brief. Slovakia's credit rating cut to A. S&P Global Ratings downgraded Slovakia's sovereign credit rating from A+ to A on April 24, 2026, while keeping the outlook stable. The agency pointed to weaker economic growth, high public spending, and slower fiscal consolidation. Slovakia's economy is expected to grow only 0.5% in 2026, pressured by weak consumer confidence, tighter fiscal policy, and softer export demand. Growth is projected to recover to an average of 1.9% between 2027 and 2029, but fiscal pressure remains. The budget deficit is expected to average 4.8% of GDP, while net government debt could rise to around 62% of GDP by 2029. Slovakia downgraded to A. Growth forecast, 0.5% in 2026. Fitch upgrades Lithuania to A+. Fitch Ratings upgraded Lithuania's long-term foreign currency rating from A to A+ on April 24, 2026, with a stable outlook. The upgrade reflects Lithuania's resilient economy, supported by investment, consumption, exports, and EU-funded projects. The economy expanded 2.9% in 2025 and is expected to grow 3.1% in 2026. Fitch noted that Lithuania still faces risks because of its small economy and its location near Russia and Belarus. However, NATO support, Germany's planned troop deployment, and the presence of U.S. forces help reduce those security concerns. Lithuania upgraded to A+, 2026 growth forecast, 3.1%. Belgium downgraded to A-. S&P Global Ratings downgraded Belgium's long-term sovereign rating from AA to AA-, keeping the outlook stable. The downgrade was driven by persistent fiscal imbalances and slow progress on budget consolidation. Government spending remains above 54% of GDP, one of the highest levels in the European Union. Belgium's deficit widened to 5.2% of GDP and is expected to remain near that level in 2026, before easing to 4.5% by 2029. S&P also warned that pension and labor reforms may be difficult to implement. Economic growth is forecast to slow to 0.9% in 2026, compared with 1.0% in 2025. Belgium downgraded to AA-, deficit 5.2% of GDP. Moody's keeps Norway at AAA. Moody's affirmed Norway's sovereign credit rating at AAA with a stable outlook. The decision reflects Norway's strong fiscal position, low debt, solid institutions, and one of the world's largest sovereign wealth funds. These strengths give the government major financial flexibility during periods of global uncertainty. Moody's said Norway remains well-positioned to absorb external shocks, even with volatility in energy markets and geopolitical risks affecting the global economy. Norway rating affirmed, AAA, outlook stable. Week ahead, markets focus on Iran, big tech, and central banks. The coming week could be one of the most important for global markets. Investors will closely watch whether the U.S. and Iran can move toward an agreement or reduce trade tensions as the conflict enters its 8th week. At the same time, major U.S. tech companies, including Microsoft, Amazon, Apple, Alphabet, and Meta, will report earnings. Their comments on AI spending will be especially important for global stock markets. Central banks will also be in focus. The Fed is expected to set interest rates in what may be Jerome Powell's final meeting as chairman. Policy decisions are also due from the ECB, Bank of England, and Bank of Japan. Key data releases include Q1 GDP from the US and Euro area, inflation reports from the Euro area and Australia, and PMI figures from China. Big week ahead: Iran talks, big tech earnings, Fed decision. Canada budget surplus narrows in February. Canada recorded a federal budget surplus of 5.66 billion Canadian dollars in February 2026, down from 7.57 billion Canadian dollars in the same month last year. Government revenues fell 5.5%, mainly because of weaker corporate income tax collections. Program expenses declined 2.8%, partly because several transfers to provinces and municipalities were delayed. Meanwhile, public debt charges rose 2.5% as higher interest rates continued to pressure borrowing costs. For the period from April 2025 to February 2026, Canada's cumulative deficit stood at 25.55 billion Canadian dollars, compared with 19.27 billion Canadian dollars a year earlier. Canada's surplus falls to 5.66 billion Canadian dollars. U.S. inflation expectations jumped to 7-month high. The University of Michigan survey showed one-year inflation expectations in the United States rising to 4.7% in April 2026, up from 3.8% in March. This marks the highest reading in 7 months, showing growing concern among consumers over future price increases. Longer-term inflation expectations for the next 5 years also increased to 3.5%, the highest level in 6 months. The data may complicate the Federal Reserve's policy outlook, as rising inflation expectations can make future price pressures harder to control. U.S. one-year inflation outlook, 4.7%. U.S. consumer sentiment hits record low. U.S. consumer sentiment remained near historic lows in April 2026. The University of Michigan Consumer Sentiment Index was revised to 49.8, slightly above the preliminary 47.6, but still the weakest reading on record. Confidence fell across nearly all demographics, regardless of age, income, education, or political affiliation. The report noted that the Iran conflict, higher gasoline prices, and broader inflation fears have heavily damaged household confidence. At the same time, one-year inflation expectations surged to 4.7%, while long-term expectations climbed to 3.5%. U.S. Sentiment Index, 49.8, lowest on record. South Africa 10-year yield climbs above 8.65%. South Africa's 10-year government bond yield rose above 8.65%, reaching its highest level in more than 2 weeks. Markets remain cautious due to Middle East tensions and continued disruptions around Hormuz, which have hurt global risk appetite. South Africa's inflation also edged up to 3.1% in March, compared with 3.0% in February. Officials warned that higher oil prices may lead to second-round inflation effects, where companies raise prices further and workers demand higher wages. SA 10-year yield above 8.65%. Belgium business confidence falls again. Belgium's business confidence indicator dropped to minus 14.2 points in April 2026, down from minus 13.7 previously. This marks the weakest business sentiment reading in 1 year. Confidence declined across construction, services, and trade sectors. Only manufacturing showed a slight improvement. Businesses remain concerned about order books, demand conditions, and rising price pressures. Belgium confidence, minus 14.2, lowest in 1 year. Chile producer prices accelerate. Chile's producer prices rose 14.8% year-on-year in March 2026, accelerating from 12.9% in February. The biggest increase came from the mining sector, where prices surged 25.8%, driven largely by a 25.3% rise in copper prices. Utilities prices rose 3.9%, while manufacturing prices increased 2.4%. On a monthly basis, producer prices climbed 2.1%. Chile PPI, plus 14.8% YOY. Germany 10-year yield holds above 3%. Germany's 10-year Bund yield remained above 3%, staying close to its highest level since 2011. Markets continue to react to rising crude oil prices and inflation concerns, increasing expectations that the European Central Bank may need to keep rates higher for longer. Money markets are now fully pricing in 2 quarter-point ECB rate hikes in 2026, with a strong chance of a third move before year-end. At the same time, Germany's IFO Business Climate Index fell to 84.4 in April, below forecasts of 85.5, highlighting weakness in Europe's largest economy. Germany 10-year yield, above 3%. Mexico economy contracts again. Mexico's economic activity fell 0.3% year-on-year in February 2026, matching the decline seen in January. Manufacturing and utilities weighed on growth, while agriculture and services provided limited support. On a monthly basis, activity increased 0.1%, recovering slightly after a 0.9% drop in January. The data suggests Mexico's economy remains fragile, with industrial weakness still a key concern. Mexico GDP, minus 0.3% year. UK gilt yields near 2008 highs. UK 10-year government bond yields stayed above 4.95%, close to levels last seen in 2008. Investors are increasing bets that the Bank of England may need to raise interest rates further as inflation pressures intensify. Businesses now expect CPI inflation to reach 4.0% over the next year, up from 3.5% in March. Markets are fully pricing in 2 BOE rate hikes in 2026, with a third move also being considered. Screen highlight: UK 10-year yield, 4.95%. Canada wholesale sales seen rising again. Canada's wholesale trade is estimated to have increased 1.3% in March 2026, following a 2.0% gain in February. The expected increase was mainly supported by stronger sales in machinery, equipment, and supplies. If confirmed, it would mark a second straight month of gains for the wholesale sector. Screen highlight: Canada wholesale sales, plus 1.3%. Canada retail sales extend gains. Canada's retail sales are estimated to have risen 0.6% in March, marking a third consecutive monthly increase. In February, sales increased 0.7%, led by gains in autos, food and beverage stores, and general merchandise. Used car sales jumped 4.0%, while core retail sales also rose 0.6%. The figures suggest Canadian consumers remained resilient despite economic uncertainty. Screen highlight: Canada retail sales, plus 0.6%. Mexico jobless rate edges higher. Mexico's unemployment rate rose to 2.4% in March 2026, up from 2.2% a year earlier. The number of unemployed people increased by 136,000 to 1.5 million, while employment rose by 422,000 to 60.2 million. The labor force participation rate reached 58.6%. Despite the increase, Mexico's unemployment rate remains relatively low by historical standards. Screen highlight: Mexico unemployment, 2.4%. U.S. Treasury yields hold steady. The yield on the U.S. 10-year Treasury note was little changed at 4.32% on Friday, as investors continued monitoring developments in the Middle East. Markets reacted to reports suggesting a possible breakthrough in U.S.-Iran talks in Islamabad, while President Trump also announced a 3-week extension to the ceasefire in Lebanon. Despite the calm session, the benchmark yield is still up around 7 basis points this week, as elevated oil prices continue to fuel inflation concerns. The Federal Reserve is widely expected to leave interest rates unchanged next week. Screen highlight: U.S. 10-year yield, 4.32%. Brazil current account deficit widens. Brazil's current account deficit widened to $6.0 billion in March 2026, compared with $2.9 billion a year earlier. The result missed expectations of a $5.6 billion deficit. The goods trade surplus narrowed to $5.6 billion from $7.2 billion, while imports rose faster than exports. The 12-month rolling current account deficit widened to $64.3 billion, equal to 2.71% of GDP. Screen highlight: Brazil current account deficit, $6.0 billion. Brazil consumer confidence hits 4-month high. Brazil's FGVIBRE Consumer Confidence Index rose 1.289.1 in April 2026, the highest level since December 2025. The improvement was supported mainly by better views on current financial conditions. Households also became more optimistic about future finances, although planned purchases of durable goods slipped slightly. The report signals improving sentiment among Brazilian consumers. Screen highlight: Brazil confidence, 89.1. Russia cuts rates again. The Bank of Russia cut its policy rate by 50 basis points to 14.5% in April 2026, matching market expectations. This was the 8th consecutive rate cut since rates peaked at 21% last year. Officials said inflation expectations have eased, allowing looser financial conditions. However, the central bank also warned that inflation risks remain elevated. Markets now see the easing cycle approaching its end. Screen highlight: Russia interest rate, 14.5%. Macau unemployment hits record low. Macau's unemployment rate fell to an all-time low of 1.6% in the 3 months ending March 2026. That compares with 1.7% in each of the 2 previous periods. The number of unemployed people dropped to 6,000, while total employment stood at 377,000. Job gains were seen in real estate, business activities, and hospitality. Screen highlight: Macau unemployment, 1.6%. Macau tourist arrivals jump. Tourist arrivals in Macau increased 10.6% year-on-year to 3.394 million in March 2026. Visitors from China rose 10.6% to 2.39 million, while arrivals from Hong Kong and Taiwan also increased. For the first quarter of 2026, total visitor arrivals climbed 13.7% to 11.21 million. The data highlights continued recovery in tourism activity. Screen highlight: Macau visitors, 3.39 million. Global markets remain focused on 3 key themes: Middle East geopolitics, central bank interest rates, global growth slowdown versus resilience. From sovereign downgrades in Europe to rate cuts in Russia and strong tourism in Asia, the world economy remains mixed and highly sensitive to inflation and energy prices.